Oil falling on Tuesday for the 10th session out of the last 12. What's ahead for crude? Welcome to Trading Nation. I'm Eric Chemi, joined by Craig Johnson of Piper Jaffray and Erin Gibbs of S&P Global. Craig, I want to start with you. What are your thoughts here on oil? Why has it been going down so much? And can we continue to expect it to go in that direction?
Yeah, well, if we take a look at the chart of oil, we brought in a multi-year chart of oil. And what we've been seeing here from the price action has been kind of the classic inverted head and shoulders pattern setting up, meaning a pretty good left shoulder, a head back in the February timeframe, and the right shoulder is still, in our view, forming. Neckline right around $50. That's kind of the key level to be watching. I think a lot of investors know that a breakout above $50 is going to set oil prices up for a move perhaps to $70, $75. Right now it's just taking a little bit more time to get done as the fundamentals in the oil markets are kind of swinging back and forth between what's happening with OPEC, what's happening with inventories here in the States. But from my perspective on the charts, the last time I saw a setup this attractive was the bottom of the equity market in 08 and 09. And at that point in time, we saw a nice measured move on the overall broader market that took 9 months to play out and reached our measured objective within 3 points. I think right now oil is doing the same thing, taking a little longer to set up, but looking out 12 to 18 months, I see oil in the $70 to $75 range from my perspective.
Erin, what about you? Do you see $70 to $75 oil, especially with that surge in stockpiles that we've been seeing recently as well?
Yeah, I don't have a target on the oil prices, but I definitely see more potential to go down as we've seen these stockpile surges. We saw obviously the report of one of the largest stockpiles next week, and we're expecting even more for the following week. That combined with some of the countries saying that they're not necessarily going to adhere to the OPEC agreement, particularly with Saudi Arabia, really just causes a lot of uncertainty. And the third thing, and particularly in just what we've seen in the past 2 weeks, of course, again, is the uncertainty around the election. One candidate certainly looks to be more negative in commodity markets than another, and so that just causes a lot more volatility. So I think some of it will go away once the election is over, but the stockpiles is a real concern.
And then real quick, going back to Craig, I know you're looking at the charts, but is there one fundamental factor that concerns you the most about not hitting that 70 to 75 target?
Well, I think it's ultimately what does OPEC do? Do they cut? Do they not cut? That would be the one fundamental factor that would be a concern to me. But looking around the globe, a lot of countries need higher oil prices to sustain their budgets, to basically the import-export parts of their business. So despite all the discussion that's happening out there in the market, I would think they would certainly like a higher oil price than what they have now.
Well, there you go. I think a lot of people would like a higher oil price. So my thanks to Erin and Craig, and thank you for joining us here on Trading Nation. I'm Eric Chemi.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.